think that is why we're seeing the stock go low. So I was talking about a solid side. And you have obviously all the rates. One is down. It's those stories. It's that the numbers are when the message yeah. Cancel. Absolutely. Can we? I'm just going to put a spotlight on another stock that I'm high on. Just BBVA. It's one of your biggest volume movers to the downside. At least it was initially, and now it's facing a volatility interruption. I'm not seeing a reason for that. But one to have an eye on, given that it has an exposure one to the United States and two to the emerging market story as well on how to navigate these markets. Freddie Lake, managing partner at management joined us at the table, right? Let's see you this morning. We are trying to work out what the read-through is around the deficit concern, not only in the States, but arguably if that creates a roadmap for the rest of the world into the equity picture. How responsive should the equity market be to volatility in the bond market? It's never a good thing to talk about bond markets. It's something what we saw in 6 months that was weaker around the valuations because the US market is still very expensive. And the primary driver that it feeds through initially is the valuation of the bond. Very high bond yield, you've got returns to the capital, you've got a high cost of capital. And then secondarily, it feeds through with higher interest costs, consumer loans, lower capex, which is so deals very rapidly and give us particular much an impact on the really depends on how much it sustains. And then the broader equity market, what we've seen so far this year has been very welcome, in our opinion, in a rotation. There hasn't been a reduction in equity. Negative stocks. So now. And some of the other less integrated businesses that are still very high quality. So more to that, is it could cause some kind of liquidation event or exit from equities full stop. There's this question of how much exposure do you want as an international investor to these dynamics you just laid out in the United States. It's not showing up when it comes to European companies, British companies that have that exposure to the United States. Are you seeing a difference in the way they trade? There's certainly been a little bit of people diving through and saying, well, actually, I'd rather have exposed stocks, which is the first time in 10 years. And normally it's been, I remember 15, 20 years ago, every stock that over-indexed EM in a great story. And you can see these scatter charts of everything, EM sales, PE premium, like that with the US for the last 10 years. And I think that's impressive. So it's becoming a little bit. What we're seeing in terms of when we talk to the businesses is less capex, less hiring, not necessarily stopping forever or withdrawing from the US, but the incredibly high level of uncertainty with marginally positive news in their domestic markets, being made to rethink some of that allocation. So it's a pause at the moment, rethink, potentially reallocate to the markets.
Are you reallocating a little bit more to Europe? I was looking at this that you own, the top 10 holdings. Is it quite a representation of French construction, for example, in there? And we've got ourselves quite excited about the German fiscal plans, of course, in this part of the world. What is that based on?
So we've been Vinci, which is in the top 10 and the for about 4 years. Stock's been doing brilliantly. The underlying earnings have been growing 10, 12% a year. It's really an infrastructure business now, more than infrastructure, but it does both. Chart later, it didn't really move. And then this year, they've been there for a while, but the performance has been delivering at an operating level. And these things are just getting starting to get recognized by international. So we've been positioned like this for a number of years, and I think it's starting to see that broadening out.
Expectations, how much your portfolios reflect up these expectations for better growth in Germany then, because conversation coming up later on with the Council of Advisors over in Germany. They've taken their growth forecast for Germany for next year up to 4%, only 1%. Spending. Is that all? I mean, how much are you reflecting that in your portfolio?
So we haven't made any real changes this year. So recent 5 months of news flow hasn't really impacted us with changing. So we're not standing behind huge European growth too much. And one thing about defence spend is it's very low multiplier on GDP. You build loads of rockets, you put them in a warehouse, you hope you don't use them. It's not terribly constructive for long-term GDP. I think that is one of the core problems that everyone has been talking about. The end of US exceptionalism, capital flight from the US into new regions. And I think those tourists are looking around and thinking, where can I put capital? When they get there, it's not appealing. And so I think we're in the very early stages of this discovery where huge capital coming to Europe.
So what I'm doing a lot from the rest of this is we've got from the US a little bit, restaurant. What does the rest of the world need?
That's kind of it. I mean, we've all got our own problems. The situation in the UK is fantastic.
Where is the rest of the world? Look at the rest of the world. The US over here, the rest of the world over here. Where's the opportunity in the rest of the world? It doesn't sound like you're convinced that it's in Europe. It's in Europe, very specific. You may have to wait. Is it in the air? Where is it?
So, my answer is that it's very specific. And we are different businesses. They happen to be in.
Where's the opportunity? But if you were looking, you start with a white piece of paper like that, there'd be more emerging markets elsewhere.
We have the ability to change it anytime we want. So, I still have half the portfolio in the US. So there's still a huge amount of value in US businesses. It's just outside the 50 and the back 7 where all the attention and volatility and most of the overvaluation. Just below that, thousands of other businesses to consider and look at, which we think are brilliant. We just don't invest regionally per se, but I do think I do think that's where the limitations of this argument comes. Everyone says, "Oh, this is too expensive." People need to go somewhere else. When they look somewhere else, it's not that compelling. It's just trend growth in the US. And it's got its own problems.
The questions are maybe that's
better valuations goes.
It's not a trade. Or ahead to investing in the United States right now. I paid for dollar in Europe and paid for dollar investors in Europe as well. How big a headwind could that be in terms of contracting from your returns?
So quite of the European equity story in the past 10 years is growing their sales in the US. They're now going to get translated back at a temperature lower level. And so factoring that through the models takes away a fair bit from the European equities earnings growth story. So that's not going to be good. It's going to be down to when the hedges roll off. In terms of investing in the US, it's been this wonderful thing. Buy great companies and get an extra 3 to 5% on currency. And so it was a lazy, unhedged, easy way to invest. And suddenly you've been reminded the currency risks even in America. And so I think again it just causes that extra layer of volatility, a higher required return from underlying international investments if they might have to support another 10% devaluation of the currency. So all else equal, valuation should be lower again.
I spoke to a business that has benefited from that earlier on, the EasyJet. And of course, a lot of the things that you buy as aviation costs are priced in dollars, so if that's cheap for you, then that's all for the good. But you own the sector, don't you? You own Ryanair, which of course is done really well versus EasyJet over recent past. I mean, how are you looking at that kind of sector right now, or that kind of investment?
So we only bought Ryanair last year, actually, in July, and it's the one airline we buy. So to be really clear again, it's
they come with an interesting reputation in terms of long-term value creation.
They do, but they've done very well over a large number of cycles. And I think it's their cost discipline, it's their newer fleet. They've already got the planes they need. Everyone else is desperate to get new. EasyJet CEO was on the show earlier saying he wants to retire his planes, but he can't. Whereas Ryanair's average plane is only 3 years old. So the sector in general, I mean, it's doing quite well. Demand is reasonably solid across Europe, potentially seeing a little bit more international flow as well. And the supply of planes is tight because Boeing and Airbus are both, stalled their deliveries. So right now you've got a reasonably good intersection of the supply demand. Fares are drifting up a little bit. Even Michael O'Leary talked about the ability to have slightly higher fares. They've been flat for 20 years, fares in Ryanair. So I think a little bit of positivity in the sector. Oil lower oil prices will help, but most of them are hedged quite substantially for this year. I think Ryanair's hedged 80% for the whole of the next 12 months, so it'll only feed through from next year's numbers.
Yeah, but at a much lower level.
But at a much lower level, so it is something to make
Yeah. Freddie Quincy, thanks for talking about CS this morning. Thank you very much indeed. Freddie Lake, managing partner at Latitude Investment Management. Of course, essentially this perusal of what is going on. This is the picture as you can see. Red, very red. All this, which is down quite hard this morning. Certainly under pressure as well. There's some individual Jones that has
We are seeing some movement in EasyJet. It does look like the revenue numbers possibly taking the attention away from the streamers that the CEO was talking about. We have just seen that dusting in the world as well. That doesn't seem to be most of the story. This is the top the ancillary revenue extra seats. That is really actually as big as expected in terms of the growth of that. On that one over a long period. So EasyJet significantly lower today. That's
Children's Fund, UNICEF is on the ground in
actually
Gaza.
looks a bit better than moved down a bit more than expected. BT pretty much is a competition story. I've got to read this in a lot of the key markets. That has been the key thing for them in terms of what we've also seen with Vodafone as well. So seeing earnings for the year ahead.
In Switzerland,
This morning, in defence, connected to connecting. I'm going to go with connected to
dynamic on the ground.
But this is a defence company actually listed on FTSE one of the UK's biggest defence company, heavily exposed to the US electronic BAE Systems, which at smaller market cap, but the earnings looking pretty strong. Unsurprisingly, biggest boost for that one today. So Kinetic or Kinetic this morning in the UK. Is embracing now. I understand this is Laura Profit rate also. SpongeBob because they get no shout outs in this show. But this is a video game company that makes all those games that I just mentioned. And they've given a really bad update. Not only their games, some delays in some of their games, but also a spin-off of one of their units, which seems to be called Coffee Day. Really remember that. But that one is heavily hit in Sweden today. It's down 12% on Embracer this morning. Then another sector. Firstly, it's those renewables. City called it right on that one. They said Vestas would be weaker because of these tax credit issues. Wind energy in the US, Republicans potentially looking to actually end these credits sooner than expected. So ending potentially in 2029 instead of 2032 is the headline news from that. So Vestas, Ørsted, Nordex, EDP, all of them underperforming the drops we're seeing in the to then we finish on one big that's what we did have. It's a massive mover in the UK. Johnson Matthey up almost 33%. They're going to sell the catalyst business to Honeywell, £1.8 billion. That was unexpected and a much bigger premium than would have been hoped for that. So we'll keep an eye on Honeywell in the US. Johnson Matthey 33% in the UK following
her children's position of a vegetable. I mean, like you, I've never heard.
Hi, Joey. So for equities team, we thank you so much for walking us through some of those early news. Joe was speaking. We did get French Canadians saying the wire, the big companies looking to advertising to 48 securities, 48.1. So those numbers coming bang in line with estimates. You're seeing slight, and I emphasize slight weakness when it comes to services PMI though. It's about 47.4 reading. The forecast was 47.7, but slight strength, and we're still below 50. But manufacturing PMI is 49.9. Forecast there was 48.9. So what I'm saying is better than expected on manufacturing, not as great on services.
And we still got the German number to come, haven't we? That's the later on this hour. So we'll certainly bring that one is expected to stay at 50, just so we'll see if that materialises. So to come on this process, US lawmakers work into the night on Trump's tax and spending. House Republicans released a new version designed to bring in those at the edges from the Republican Party who are keen on voting for it. We're continuing to watch these pictures as they come to us from Washington. And Qatar Economic Forum is still underway. It's final decision. Michelle Hussein is speaking with the former Greek finance minister, Yanis Varoufakis. Plans that are taking place there in Doha, really great terminal, just like live there, and it's actually to
Because it knows you're very good.
They do.
This mentality across Gaza, where we have enough food to feed 1 million people for 4 months, just for weeks.
Africa,
James,
a
what
region
region
ripe
is
with
there?
potential for growth and opportunity, which its challenges. It's the biggest interviewing key players. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zavasaja, and this is Next Africa. New episodes every month, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. We've long talked about the fact that the journalists have been signed. Once again on display.
Is the cessation of sanctions against Syria.
Set up the headlines of the coverage numbers will be quite substantial and reported and the analysis key no one covers geopolitics like Bloomberg. Delivers the market news, data, and analysis in
Context changes everything. From our studios in New York and San Francisco, expert hosts have the data and analysis you know, and the startups to launch. It's the interviews you don't want to miss. Watch Caroline Hyde and Ed Lovo on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zavasaja in Cape Town, South Africa. Bloomberg.
Welcome back. We are 90 minutes, this one 20 minutes into the equity market session. Thus far, as you can see, this on the screen in front of you. Which is that we are sitting low. This is delivering through into the majors on the major markets here in Europe. WTI currently flirting with 60 Brent. North from that, 63.88 is where we're trading at the limit. They're both down. It's got 6%. In front of you, Bloomberg Security Editor of Energy Commodities, two-year course. What do we know? Kind of what is? Why would the Saudis? Why would they do this?
But it's a continuation of the traction they've been seeing for several months now. A couple of months back, they surprised us with this 3-month in one. And then increased 400 today, they made it again. And about the decision will be made next week. That means over 3 months they would have brought a total of 1.2 million barrels back into the market, which is more than 1% of global demand. It's a fairly big move, and obviously we see oil prices fall back substantially. I think it's interesting that on this news, now we're still holding firmly about $60 a barrel. So some of the cataclysmic price forecasts that we had heard, especially when the trade war was at full pelt, aren't coming to pass. So maybe that's given them some confidence to pursue and continue pursuing this strategy without the impact on
see trade concerns ratchet up, concerns around oil prices. At what point do the Saudis or OPEC broadly look at those falling oil prices and say, we need to reverse course? Is there a line in the sand?
There's always been an I think it's really they knew the implications of what they were doing, and I think that the Saudis in particular really feel that the senior strategy will mean that they are going to have to face a period of low prices, and that's impact. I don't think there's any sense that these prices are near to things they swear. Otherwise, they wouldn't be discussing this for a third month in a row. I think a lot of people in the market that our reporters talk to say they may pause and take stock through the summer into the autumn because there are still more barrels that they're getting off the market. But this has been a pretty substantial move, and I think the Saudis and other leading members are ready for a certain amount of pain.
The idea that they're doing this to stop those who are producing should. Is that something such an issue for the Saudis? It's just always been an issue.
It's always been an issue for the Saudis. I mean, if you look at the last few years of OPEC policy, one of the most common themes is the oil minister Abdulaziz berating of OPEC Plus members for their failure to comply and trying to force them to make back payments, sort of cuts to rebalance the book with varying amounts of success, shall we say. And I think that one thing that we can say is that patience ran out on the Saudi part, and from their point of view, they're pretty disciplined in their target. If other people are busting targets like that, they're sort of free riding on Saudi discipline, and I think they came to a point where they're losing market share, they're not getting the price benefit, and we will take advantage. I think they felt that they needed a different approach.
Thank you very much for listening, Executive Editor for Energy Commodities. Let's move to Treasury yields dimensions. Let's bring so a lot of people are making a lot about the billions losing since that.
I mean, it's frankly concerning, but I think the more concerning thing is this theme continues to come back. And it's almost one of those notions that once you see it, you can't unsee it. And I guess the momentum for this trade to come back when any worry about the U.S. is just it might change the direction of how the market trades from here. There's things going on in the market. The fact that just yields are this time when the economy is slowing. Normally, that's when we get yields.
Is the argument here that in order to attract foreign money, you need a cheaper dollar, and you need higher yields? And you see this in other economies. When the push comes to shove, that is what gets money back into the economy. Is that what we're seeing here? Effectively, the market forcing us into that kind of scenario.
In some ways, it's a revaluation of U.S. assets, something that normally happens in emerging market economies. You know, like Brazil, for example, have many of these foreign capital leaves, and the way to attract it back is a central bank hiking aggressively, the currency moving aggressively weaker in order to almost revalue assets in this country to attract them back home. Now, that kind of dynamic is not really one you want to be facing when you have a treasury market that is in size. And I think that's the most concerning thing about this price action. And look at the CBO's projections for the treasury market is going to, in 2020, it was 20 trillion. This year it's set to reach 30 trillion, and in 5 years' time it's set to reach 40 trillion. So it begs the question, there needs to be another buyer of treasuries out there. And the market is telling us that, yes, the US government, if you want to run these deficits, that's fine, but you're going to have to be paying up here. Through the just passage of doomsday. But I guess what I'm trying to figure out though is there any merit to the idea that the plumbing can't actually stay afloat? Basically, that if there is this much supply, this digestibility, yeah, definitely. And I think in respect to patient, at what point do treasury yields really attract Washington to pivot and take a different direction? And I've thought about this for a while, and I think this instability of the treasury market has to lead on to the corporate bond market, where you see, maybe the funding frees up for corporates, and maybe that's the big way to not there yet, but maybe that's the line in the sand.
Thank you very much.
So-
So, and now it's going into other assets. German PMs are due in just a few minutes. Time the French numbers will discuss what all this data means for the ECB's reaction to that conversation. Next, this is
sector.
Business leader, since this area we talk to small business owners from coast to coast about President Trump's tariffs. Some have been happy about them, many are feeling uncertain. Joining us now from Stevensville, Maryland, or Annapolis, Maryland, but his business is in Stevensville, Maryland, Bart O'Brien. He's the founder of Bay Dog, a canine adventure gear brand. He's a Navy veteran. Bart, your brand is committed to selling in brick and mortar small businesses, no Amazon, no Chewy, but you make your products overseas. Obviously, I don't need to tell our audience that you're a patriot. You served in the Navy honorably. Can you tell us about your business and the impact of the tariffs on your product?
Yes, sure, Dave. First of all, thanks for having me. Thanks.
Some tariffs, simply pushing for higher taxes on anybody, because our understanding is for Lindsay, he's looking at a new rate of 39.6%, and I think the Republican Party didn't stand for that kind of thing.
It's the biggest tariff that you've ever reconciliation numbers.
I why we're 25 billion.
I
carried it.
And
The accounting practices. The president's trying to make sure he gets no tax on tips, no tax on overtime, and no tax on social security. And he says, look, the richest Americans, he cut it from 38.6 to 37. So he just goes back to what he did last time. I'm in favor of that. I think it's smart. God has tons of power. Every big day.
Yes. So, the rate, right? We have to be thinking,
magazine that helps global leaders stay ahead. The conversation around the company, bringing more insight into people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Floodgates of innovation are going to open up. Business Week Daily, only on Bloomberg.
We're expecting to take a pretty big hit when that happens. In terms of so this is big selling from people buy
It's too optimistic. How does the current fighting stop? And this is the case.
26% tariff on it, we just cannot absorb.
We're at the epicenter of the global realignment on a scale we've seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
If that tariff's just going to go away, or if we're going to have to pay it. So I can't afford to roll the dice and gamble. So we just, best case, maybe we'll launch it fall 2026.
So my wife checked out some of your products.
Welcome back to the opening trade. Your attention goes to Germany. This is the data coming in from Germany. The composite PMI, 48.6. That is back in contraction territory, not above 50, as had been anticipated. So that's the below the survey. Where's that weakness coming from?
Just doing it.
Manufacturing is still weak, but that weakness was anticipated. There's further weakness coming in services. So we're down 47 on the services reason, and the survey was 39. So this is weaker than anticipated. This fits in with a fast-moving story of Germany, weakness in the underlying dynamics of the German economy, but action being taken by the government. Let's put all of this together and talk to Monica Schulz, who's chair of the German Council of Next Thursday. Independent Finances Chancellor Friedrich. Nice to have you with us. But you're initially in response to the weakness of this data. So you have the German composite PMI at 48.6, and weakness, more weakness than anticipated on the services side of the economy. Does that make sense to you?
It really what we expected, because yes, the economy is not strong, we are stagnating this year, but there are signs of recovery in the sense we have a fiscal package now implemented by the government. This has actually given quite a lot of expectations that the economy will be, so I'm not surprised.
You're surprised. I mean, does this mean you came out with new forecasts for the German economy yesterday? And they showed stagnation to your forecast for 2025. Does this apply downside risk to that forecast? There's a risk we could get contraction in the German economy as it is this year.
It really depends what kind of US tariff policies. This definitely has increased uncertainty immediately, so companies are affected investment and offshore shipping production to the US shipping. It's really companies for investment, so that's bad. For consumer confidence, we also see that it's still low, so consumers are impacted purchases, that's also bad. But on the other hand, as I just said, the fiscal package that is going to be implemented is
tariff uncertainty recovery, so
at least on the job side, there's not much less uncertainty than there used to be last year.
Same store sales fell.
Good morning, it's Guy. Let's talk about the exciting subject of economic multipliers. This German spending package, how quickly it comes to affect we actually get. What is your thinking around that? There does seem to be this expectation that we do see a fairly
right
big
now, and
leap
it's
across
mentioned
from extra fiscal into economic data.
percent. The vast essentially what is playing out is sort of two chills this country. But then of course there is a financial aspect among this economic uncertainty that we see right now. Essentially back shopping at Target. And if they were shopping at Target, they were spending less than the place that people came from, just really non-essential items. So it's not like a grocery store, not like a retail like supermarket. More grocery business, where people sometimes spend discretionary money. So according to the CEO, Brian Cornell, he's saying Trump's tariffs are stolen some of the savings that they've seen. As they sell about 50% of this that are produced overseas, and then 25% that is to China. That's the country right now seeing highest tariff rate. So the CEO is saying that they are trying to diversify supply chains. They're trying to switch out products, but ultimately they take out. And another factor that's playing out right now is that at the beginning of this year, Target was cutting programs like hiring both minority and also this justice executive committee that they had in place. Then in March there was a 40-day consultative and that actually had an impact on sales, and it was earnings. Worth noting though that this company has been signed for a while to get on better terms. Tariffs is likely to play out in the second quarter. And then there's the question of whether or not Target actually lost businesses that they're not going to bring. So this is Wall Street stock price again down 5% on this news. It's been a challenging time for this company. The outlook into the company isn't.
In fact, really just want to show earlier talking to how the fact that spending needs to be as lucrative in terms of fiscal multiplier like I just mentioned. Infrastructure spending or other tools as well. To the lag of a limited effect on the defense specifically.
It will be larger if it's really small infrastructure, it will be larger. So if you consider it will be expense on invest rather than defense rather than on consumption.
So in the other pieces of that investment strategy, you mentioned infrastructure, you mentioned research and development there. Do inflation rates need to factor into that or make that project additionally? Is that an issue in the past?
So it depends on capacity, and yes, we see for building capacities that still have quite some room here. If you think about road construction, for instance, there is less capacity. So in that sense, it's really important that the government announces their plans very quickly, because that means that the companies can prepare for this. They will reach that. So then we can and the capacity that is to be used. So yes, this is how we expect things are going to happen.
Michael, what do you think the priority for the German input into the trade conversation between Europe and the United States? What should the priority for Germany be when it comes to trade conversation?
It's obvious that some sectors are much more affected than others. We rely a lot on automobiles, machinery,
start with a little
also
So for 3 years,
pharmaceuticals.
served in Ukraine, so
these
thousands of missiles and drones that killed men, women, and children in their homes and apartments, like schools and churches,
be a strong
tried to
focus
keep
of the
the
German
light
administration
for a country of 40 people. 3
We want to get a final question to you if I can, and I apologize in advance,
atrocities
this is too
and
direct of a question.
The various trains of thought, from trade worries to inflation, to supply chain crises. Investors seem to be coming on our show time and time again and saying, here's a place to navigate.
Policy since the beginning of the administration.
What do you read most about the project coming
rather than Russia as the aggressor.
Actually,
It's not peace at all. It's
the moment.
history. Using aggressors always nowadays. So it must have taken them more than just reaffirm service in individual action to certify with the administration to strongly benefits for the towns. And how does context in terms of the morality that you saw in this well, I've been very cognizant that
It's terrible.
and I took the decision, this decision is fine. Chasing and the started fine is the emphasis at least
Industrial strategy, EU plans to take from medium-sized
security assistance and intelligence assistance
and the United States to fund further
in addition to that, there was a discussion about instead of and the how to behave President Trump
CEOs contact the Trump administration pro-business agenda of the EU Commission in the coming months.
Now you have the plan. Now there's a question of implementing the plan and getting eventually consensus among the conversations of challenge. And also get an idea. See the about this. What is
in the past, the European Commission has been dogmatic.
certainly
are changing its approach. This encourages us to
Just above there, the idea of potentially closure of the.
There's been discussion on the perimeter details of the
Que nous vivons est inédite en elle-même.
I think the period that we're living in is unprecedented due to the uncertainty in markets and the unpredictability of the Trump administration.
As to achieve our mutual goals, and for us on
I
the
hope that
US side
things will
and the world
stabilize and
for
that the
Ukrainians,
Americans will remain simple
keep
and loyal
us
partners for the
supporting
Europeans.
I think the main issue at play right now is what happens next.
The EU
and
Commissioner
where do we
in
go
charge
from
of
here?
industrial strategy,
There's been
speaking
some
there to
important
Bloomberg's
conversations that
Oliver
have
Crook.
happened, but I
We'll
think
return to
it's
the
very
corporate story
important that we
next. EasyJet
stick with
shares under a
supporting
little bit of pressure
Ukraine
this
in
morning at the
ways that
start
will
of
help to
European
end
trading. As you can
quickly
see,
as
they have
possible.
narrowed the earlier losses. The budget carrier reporting a bit of a revenue miss, positive outlook, but revenue miss. We'll dig into the details next.
Do you
A
expect that you
reminder
guys are
that the
gonna
Capital
have
Economic
interest
Forum
in
is
this morning?
its final day. Currently, Francine Lacroix is moderating a panel on the tech investor outlook. You can watch that panel if you would like to do so. We've got a good show still going on here, but if you want to watch that, live go on your Bloomberg terminal is the function that you can use.
To be forthcoming, finishing up the detail. Really more conversations of what happened, but and not just expect.
Can you walk us through where you think things are in SALT? Is this idea of 40,000 cap over 10 years the deal at this point?
That's the agreement we came to, and I think the SALT caucus, as they call themselves, are it's not everything they want, but I think they know what a huge improvement that is for the constituents, and it gives them a lot to go home and talk about. And of course, in the full context of the whole bill, they're doing a lot for the residents of their state, so they've got a lot to be pleased with, and I think that's going to get the job done.
Have you been up all night having meetings?
Slept for 45 minutes. All right.
Are conservatives okay with that SALT change?
No one is delighted by that, right? But they understand the necessity of our handling this issue and I think, again, with all the great things in this bill, everyone's going to have a lot to go home and brag about. So they're excited. Everybody's excited to get this thing to the finish line, and there's a lot of energy and a lot of anticipation. So it's a big day.
Coming to the Florida.
We plan to do tonight, if possible. That's my plan. So they do.
Yeah. From the belief that no story is ever spawned, that in the tapestry of human experience, first the weight of hope in a world that often tries to divide us.
President Trump.
Literature remains one of the
I'll answer the
longest
question that he
sacred
asked you,
spaces
Princeton.
where
Well, the
we
question
can
he
live
asked me was,
inside each other's
why are you banking
is
certain
only for its
groups?
pages.
What's the answer? I don't think he gave you a chance to
That
really
was
answer that
author of
question.
Manu
This is the answer to
speaking
that question.
after she was awarded the
First of all,
International Booker
Quebec
Prize for
Americans, 79
fiction short stories. The award celebrates achievements in translated fiction.
And so
It is the first ever book
The real
written in
question was about overregulation, frankly. And so as you look what's happened.
prize. Patriarchal communities in southern India. She shares the award in transparency.
Henry reports and
I'd like to now bring in Will Simmons. He is the founder and CEO.
from what told by authorities across the country. That creates confusion. Another area comes out.
The Center of Translated Literature in the US. They also have a bookstore in Dallas, Texas. Will, it is great to talk to you. Let's first talk about the winning.
That came up. So at the end of the day,
Translated by Deepa Bhakti, is a fixed income bill. Right here. Has ever been.
pretty, it's like one of the. Yeah, it's an extraordinary test to show that. So it's really
Chair judges said this, translated. Delays, which is EasyJet and Airbus, basically. So Boeing's seeing other airlines as well. For EasyJet, renew the order aircraft that are more fuel guzzling with these newer jets. Just replacing some drag as we go forward. As Penta said, there could be some impact with the oil prices and the fact that they would look to carry over lower fares. That could has a Boeing fleet, so they've obviously struggled with a lot of Boeing delivery delays over the past year or so. They're now coming into the grapple of potential tariffs on their aircraft too. So that's something they're looking out for. But with EasyJet, obviously we're seeing the stocks down, whereas London Ryanair stock and this is primarily down for shareholder returns, and also the fact that EasyJet has a very UK focused network, and a lot of consumer sort of cost of living crisis is more sort of centred around the UK at the moment compared to the rest of Europe, where travel is actually looking very, very strong.
And where does that leave the outlook for travel in the summer then, Kate? Because we've heard a lot from maybe the bigger global airlines talking about a lack of willingness to visit the US or transatlantic. That doesn't play directly to the disadvantage of EasyJet. In fact, maybe it benefits them.
Yeah, I mean, it's certainly a good time to be a European airline at the moment. You know, you have these low oil prices. And as you said, like these legacy carriers, British Airways, Virgin, and Air France, so they've all reported a slight softness between the US and Europe at the moment. Europe has strong demand.
Yeah.
Something like this.
$5 billion. Because
I don't.
AI is
Economic Forum. Let's switch focus to, I think, what is our top story?
expensive to
In
run.
Washington when it comes to the one big beautiful bill. Let's get the latest. It's very close. It's rare that 8 in the morning we're talking about this one. See the House Republicans staying late. Charlie, we'll start with you here. What was we expect in his next 4 years?
It's getting down to what. $40,000. So that was kind of trying to assuage their concerns. You were seeing ultra conservatives here there's an acceleration of work requirements program for acceleration of requirements from 2029 to 2026. The concern for them still is trillion dollars. Yes, look, it's a long journey ahead. It is going to be important, but still, it's not going to restrict it. When a bill goes to the House, there has to be some the Senate has to be a little bit more. So they're on a different calendar here, right? They have 6-year terms. The president's got 4 years in the House, and like 2 years. So that just creates a different set of incentives.
At least for Americans, it's not a make or break moment this moment today. I think there's still a lot of time on the table to get this bill passed. And so I think unless it fails by a very large margin, which would maybe entail, some ways. But it was, the price action we saw going into this is kind of like a reverse start. Back in the GFC, we had the markets really it seems like the market is pushing things. Something that was supposed to be easy, at least to start by November 2024, that if you have the majority of the House, Senate majority as well. Able to get in and pass anything. Now, I'm going to take it a little bit maternally, but that's how this price is about. I can see the both sides of this that once this bill is passed, this really helps economic independence and that creates a fall of uncertainty across the country. As we saw the tariffs, for example, progress on the tariffs, this series of learning.
We answered every You've checked off your.
No, it's
We the lazy or take it back to us.
like getting comfy, like lazy boy for the change.
Lazy boy, long live the lazy.
A lot of people are very concerned with regard to South Africa. It's really the purpose of the meeting, to see how that turns out. But we have many people that feel they've been persecuted and they're happy to the United States. So we take from many locations, if we feel there's persecution or genocide going on. And we had a lot of people, I must tell you, Mr. President, we have had a tremendous number of people, especially since they've seen this. Generally, they're white farmers, and they're fleeing South Africa. And it's a very sad thing. So,
It's taking place. You can imagine how contentious they're getting. CNN has looked at data though from the South African police about no elections of white genocide. South African President Cyril Ramaphosa remained calm, or strongly denied any promise to play. There's music in markets. That's probably I can bet you.
The multi-trillion-dollar industry, we'll show you what's happening in ETFs like nowhere else. ETF IQ only on Bloomberg.
President Trump
US tech is influencing global markets.
Trying to use the members of this delegation, which include not only the white agriculture minister, but also the white South African golfers that President Trump actually knows fairly well. At the other one, it was not clear at all. President Trump had been convinced. In fact, it's sort of split through these printed out speakers.
Movers. Francine Quinn.
For the first time since Israel began its blockade more than 11 weeks ago. Israel lost its trust into Gaza starting Monday. Just 3 weeks ago, the United Nations said it was still waiting for Israel's permission to distribute it. Humanitarian groups say today's deliveries are just as wrong. The group, Without Borders, says that this new aid is insufficient. On screen, 10 seats over. My next guest is the president and CEO of Save the Children. The initial
Say there's a debate going on at the moment in the House on possibly for 10 more hours and they're likely to get that vote. Is there this expectation is that it may pass? To it. There's a signal ability to make deductions for state and local taxes also that threshold should be and it's and that also tax credits and I said I want to say that each year is the impact of taxing for companies that shit's moving in here today so it's really it gets through the that would benefit. Also, you have management changes forward and for increases tonight, and you can see in the volume. A level of that you share. Voice. Treasuries. Signal then here about at the beginning of April when President Trump conceded that the materials a bit yippy. Does seem to tell the there you go. Again, very close to breaching cycle highs. Take a look at this next chart, though. I want to point out there was another catalyst that happened yesterday. It was a weak 20-year auction that happened around 6 p.m. time yesterday. This yellow line is when that auction happened. Not only prices around the curve, but it also saved the equity market. The equity market, S&P 500, declined over 1.5% after this week Treasury auction. Higher yields and really feeding into risk appetite when it comes to the equity market.
I'll put the 30-year move as a context for us because it was really nice yesterday various houses that are control. Folks who need here and enjoy the market who focuses on still the fantastic area of the planet. The long-term context.
Well, Anna, we are very close, less than 10 basis points away. Year that was reached in October of 2023. If we do reach that level from 2023, we have to go back 18 years, 7 to see comparison highs in these 30-year yields. And again, I just feel our history to see the midpoint of the site scale and down in areas. We also see market yields relative, and we've not seen and that's exactly so that stands out as high. Treasury yields rising does help the ground. That's not the case this week. Dollar spot index hit a low yesterday. It is down 50% so far this week's trade.
Yes, conversation hosted earlier today to kind of say inflation shape says you're showing targets. Which you since April early the house contributing strategy. So we're talking about 10 7
I don't know the answer to that. No, we're still trying to look at it. Here for this kind of outcomes. Well, for sure. This time, I would not include a high environment. Economic history, rates have been far higher than this, and it surprised people over time. And I think a lot of long-term trends have been I don't want to now. I'm going to cautious. We're going to have all of that. I know this whole planning, this environment. It's not and there's always somehow you said on the internet you can do whatever you want. And then you said other sources really bad. And they was in control of it. Today, trees are on that deck. Rising around the world. They can have a lot more. Trade black 12. And the reality is
think you have to separate two things.
Tim.
All those facts. Initial plans. That does not tell you.
Jamie Tillman.
Actually, thank you to the addition of now. Things that will be expensive. Finding a tremendous progress right now that convergence is Apple is $17 billion year expansion housing. That is super exciting. So the tricks sometimes actually people find out. Percent is sectors, I would say. Resources, energy transition, significant opportunity to invest. Serving very expensive that the innovation that is leading up its goes back to this public private partnership. A lot of the money I guess I can finish the region, stays in the region. Yeah, many will invest in players in the region. I believe. So, take your right now, they're innovating in a very and again, separating it down. Markets, So now we still invest rather than valuations continue to be in certain sectors, and there's written about them. These that will potentially stay private for longer. And the good news is there's a tremendous amount of private capital to support those companies. So I think there's a focus on and the answer is absolutely yes. We travel around the world. Saying, now we're
very big focus in county roads, which I would have said a bit months ago, there was concerns. Force the use. I think here, there's a tremendous amount of focus in this region. It's not all the things this region has to offer in terms of capital, energy, research, and science. It's very exciting. Europe, like a lot of the defense spending service in Germany has given assessments across Europe. There's, this is that is not defense security. So, the sector is the investment in Europe, not just defense. And where does it include AI infrastructure? I mean, it's at all top levels, right? Where does it include value creation? At a perspective, tremendous need for capital there. Really across the entire spectrum of things, to applications, and investments. And we couldn't be more excited about opportunities for finance and something that's something we have. I think so much so.
Earnings season is here. No, you're sensible, right? Wait, opening. Really exciting. Nobody covers earnings.
Studios in New York and San Francisco. Expert hosts have the data and analytics from the companies you know and the startups to watch. Interviews Joe Flores, Caroline Hyde, and Ed Lembo on Bloomberg Technology. And Emily Daily Business Show dedicated to tech. Trading action. Live every week. Only on Bloomberg Television. Context changes everything. Bloomberg Business Week Daily magazine that helps global leaders stay ahead. Conversation around your company, bringing you insight on the people, trends, today's economy, games, plus global business, finance, and tech news. Innovation are open Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew News is business live 2 times a day, every day. Now at 1 and 5 Eastern, only on this week. Live coverage of the Qatar Economic Forum, Bloomberg Horizons Middle East and Africa, and the Pulse broadcasting from the conference floor. Then, throughout the day, we'll the highlights for the key policymakers and market leaders on the issues affecting the global economy. Live coverage from the fifth edition of the Qatar Economic Forum continues this week on Bloomberg Television. Context changes every day.
I can categorically state there is no genocide in South Africa. There are crime problems, there are issues around land. And I think President Ramaphosa tried to land that point last night in a very difficult situation. We saw the leader of the opposition actually back up by his president
Very good choice there, chief executive. From 91, speaking here. My president of the genocide against white farmers in South Africa. South African president, Cyril Ramaphosa, in the White House yesterday was seen as a chance to mend trade relations between Washington and Israel. Instead, used the opportunity to appeal to genocide allegations, pressured the video that so the
Ghana farmers. Each one of those white things you see is a cross. Approximately 1,000 of all white farmers, the family of white farmers. This criminality now. People who do get killed, unfortunately, through criminal activity, are not only white. Majority of them are black. And we are now utilizing farmers are not black. We are not taking a student there. The farmers are not black.
well, joined by Arjun managing. I wasn't sure what we were on, right? The mechanisms of control of fears. Someone from his advisors who made he was one individual.
Yeah, I think they would probably be aware that they would probably see this action there right now. But I think if you just look at the numbers that we have been kind of reporting about. 72% of white farmers kind of, and 7% of the population. So it doesn't matter what the system has been doing. It's a small numbers too. There's huge problems to our areas. If you look at the numbers, 27,000 more in Africa. 0.2%. So again, the data doesn't support. Yeah, very good point. What we are hearing, we heard the finance minister. He is not there at Washington, but he's been getting feedback, and he says that there has been a hope for a reset. So there will be students that he's hoping.
I guess it's the one
Exactly what is happening in terms of distance. He, I think, is getting a lot of support from what we've been hearing from Africa, really, and hopefully that will help the government of national unity as well as they progress into a lot of contentious laws that are coming out, including the expropriation law and the healthcare law that have been in the works for a while.
Thanks so much for doing this. They're in charge of all of our continent's coverage. Now, this was happening at the plenary stage here at our economic forum, our edge, senior energy analyst, speaking about the ways to power AI. Let's listen in.
On the screen showing that the solar emissions had a really rough 2024, also 2023, despite from the U.S. president and the prior administration. 2025 and years as well, and the discussion also going on in the U.S. So, solar aims and storage needs to be here. The idea that data centers are rapidly propelling power demand. We think that the hyperscalers, despite their ambitions to carbon neutral and all of their ESG goals, are a very practical lot. They are focused on rapidly scaling AI, and we don't try to get there without a
Of course, the terminals. After 2 hours of next.
Save up to 60% at bottomline.com.
The itch and rash of moderate to severe eczema. Disrupts my skin night and day. Despite treating CFO control these, I have remote exerts. So that's responsibility. We need to engage in different topics. It's not just being dedicated to the executive, it's function. And wherever newsmakers and museum journalists brings you conversations, deep discussions, and important insights. Using the future is for inflation. It's too optimistic. How does the current fighting? Today, powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe.
Whenever and wherever it happened. I'm Stephen Engel at the Forbidden City in Beijing, and
Good morning, everyone, and welcome to the Economic Forum in Dune. These are your top stories. Donald Trump's tax and spending bill returns to the House after overnight negotiations, tax deductions, and health care cuts. Investors push back against the prospect of a ballooning U.S. with 30-year treasury yields covering near 20-year ends. The South African president insists that peace with President Trump, despite being ambushed with claims against the police. I'm just getting a little bit of breakthrough out of the UK. Actually rising to 50.2, where everything above 50 means that expansion of territory, that increasing to 49.4. So that's now, Israel Prime Minister Benjamin Netanyahu says he's ordered enhanced security arrangements at that's really Bloomberg's Paul Ross, who's with me here in Qatar. Police say basically that 30-year-old male suspect has been detained.
implications of this all. Keep working together to ensure it. In terms of the right to
I'm set in the picture. Feel significant including abdominal pain and feel.
Oh, guys.
Fencing against their status to eventually.
In the West Bank, the IDF has also apologized after firing warning shots at some visiting diplomats.
Enjoy every research organization.
Strange incident. To know that nobody was injured among this pretty large group of diplomats. They represented. Presumably they know that they were in 5 warning shots. We don't know if the first warning shots and the EU and Italy and Jordan and Egypt and all others condemn the idea. We said there needs to be a full investigation into.
Oh, thanks so much, Paul Wallace. They're very late. Like the questions hearing these countries back against
Forgive me to speak here. We have a revised treaty which is pending because one country is not ratifying. That is not a new situation. Unfortunately, it's not evolving. But this is not dramatic in the sense that the funding treaty that is in place, and so we have all our financial instruments, for example, in case of necessity. What is not in place is a backstop to the funds to those banks which has benefiting from contributions from banks themselves. So that backstop is not in place, but the rest is in place.
Yeah, but have you spoken to the Italians recently? And is there a way of convincing them they don't?
We are speaking on a regular basis with the Italian government. On the other hand, we have to respect the democracies and all of them. Also, the treaty can only enter into force if it is ratified by all countries. So it's up to the Italians to find a way to ratify. There is no political willingness to agree it, but it is not preventing us from being active if necessary.
Do you worry at all about some of, I guess, the firepower, the power of the ESM, whether any limits could be changed?
We have a firepower of, as you know, 500 million euros, out of which 425 are available, and this is extremely useful in these challenging times with the geopolitical tensions, wars, as we haven't seen them for a long time. So all of this is creating a lot of European Central Bank declared yesterday, yes, that the geopolitical uncertainty and also tariff issues worldwide are to financial stability. And let's face it, financial stability is good for peace, and we are in a time of less peace. So obviously, this has an impact. And so, following that very closely, our role is also to step in eventually for the 20 euro area member countries in case of risks to financial instability. So not only in case of resolution of crisis, but just also having a kind of prevention role. These tools that we have seen that what the International Monetary Fund has, and it's good to have that available.
But so how much push do you think will come from certain countries, maybe France, maybe others, to make sure that Europe doesn't regulate too much, that it follows maybe the path in terms of deregulation? And could you see risks arising from that?
I think there's been a recognition by the Commission and by all member states of the EU that there has been over-regulation, and the pendulum has gone too far in one direction, is now coming back, and the goal is not to complete the regulation, is simplification. And the omnibus directive of the Commission on deregulation, which is called simplification, is on its way, and it's passing lots of things. And so I think it shows the determination of Europe to be more business friendly without compromising with essential issues like climate change or others.
It's very clear that the Trump administration is actually in full support of cryptocurrencies. What does that mean for Europe?
The jury is out to come out of the executive orders or the laws that are in preparation in the United States. It's very closely as the Stability Mechanism of last resort. We're obviously looking at all the things that could have an impact on the euro area, and depending on how the regulation on cryptocurrencies or on stablecoins is going to be, have an impact on the euro area. I think about our autonomy or independence in terms of currency. So it could encourage companies to issue stablecoins. There were initiatives like that in the past that the United States itself did not support. So it needs to be seen if this is the direction in which it's going. I would not like to speculate on it for the time being, but it's something that is on the radar screen of all European governments.
But do you think Europe, I mean, you talk a lot about actually US exceptionalism and whether, this is only to more US exceptionalism, whether it was actually a definition of US exceptionalism, whether Europe, for example, euro as a reserve currency. Is now time for Europe to make that decision and to forward if that's what they want?
The answer to that is not one anything, yes. We've seen in the last the markets being made the states and the status of the dollar. We're in the world for many reasons. The ability of the US administration, the tariff issue, we see in the last week, the last budget, this is using this word. I hope we look at it in the university and the IMF meetings for places that are stable, resilient, that have the rule of law, that are open to trade, and this is really what we have in Europe. So it is definitely an opportunity for us if we do our homework, and the homework means implementing the savings and investment which is also in the Letta report, and we as ESM are an actor in this in the weeks to come.
only improve step by step. It is sometimes very efficient.
As always, into account.
Simultaneously, that impact knowledge increase. So that's clear. And right. I would not dismiss the possibility that that trade distortions and tariffs could have eventually a disinflationary impact on the global economy and the European economy. We have to look at the evolution of inflation. We have to look at the projections that we have to regard as well the transmission of monetary policy. But the disinflationary process is ongoing, and we will be able to
That was the ICB Vice President Louis. Estimates. Budget airlines and delivery of airlines to supply chain challenges. To told Bloomberg that the industry is benefiting from oil prices.
As we to go down to 8%. So that allows great fares to pass the benefits of savings to our customers, equally being mindful of the cost positions which may have levels of inflation.
Let's get more now from Bloomberg's Charlie Wells. So Charlie, good morning. What's the latest from EasyJet?
Market is not like this year. So that's what we're from EasyJet, and it really seems to be latching onto this issue of flight workers. A lot of these budget carriers try to grow, they benefit as you just heard from that oil price. But new fleets that burn less fuel. EasyJet their supplier is not doing well. Despite the fact that doing some summer bookings, EasyJet is struggling to take off the market relative to one of its competitors. It was just one of its best weeks as far as the markets go, and with this report unlikely to change this whole year.
Soft demand. Is that across the board or is that because they
difficulty for
LVMH, they seem to be sending out signals that we're supporting to some blue. There's often important that we've seen over the course of the year, LVMH having a difficult time peers. This could be a Walmart discount that we've sort of started to be seeing. This company hard soft divide is crucial. 40% of the revenue in the third quarter came from Asia. So when there is consumer softness, it's start to see LVMH. Now I want to raise your hand on a particular area in Asia. Hainan province, this is a popular vacation destination for Chinese travelers when they go domestic. And what we've reported is the continual duty-free shopping declines there. We've seen that month after month. This spills into not just LVMH, but other L'Oreal's, the Estee Lauders, and the Shiseidos, and they receive regional travel space and softness in China, Asia, spilling out to one of these large companies.
So interesting. Also, some of the stocks that we're watching. Now, coming up, highlights from the and we'll hear from some of the speakers, including is Bloomberg.
Also, so your content experience. It's television job. It's Fox. You hear just in see even for both this is the rise there's music. And if you want to
Two investors, co-executives, global innovators, joining for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Khanum on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zavasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Organization isn't doing business with any government entities. They're doing it with private investors. I mean, many people in this room probably know them or have talked about them with that. And so, there is a very clear distinction between those things.
Basically, we continue to receive 351,000 and always be a transport for another from US policy on tariffs and taxes.
Some of the leading minutes heard from here the Qatar Economic Forum in Doha. Now, Bloomberg's 100% chance for the moderating panel on building speakers, Adams, chief executive of NTT Global Data Centers, Mark Gasson, chief executive. Now, subscribers of the current is coming down on the fifth annual Qatar Economic Forum. Mike Daoud, chief emerging markets economics. Some of the highlights. Yeah. couple of days. Region and understanding some deal making there is around the world. How much money are you expecting from abroad to be here, be deployed here, but actually stay in the for the week? What is more important because the plan is taken for the world to the region. So that's the way I think. I think that this this week is so possible with trade, trade focus, trade market, it's possible to make exactly also looking at expectation is from the region. Just so possible house, but just the focus on that and I guess interest rates, which is important because multiple years is not to the US. Because if the US doesn't interest rates, it determines capital flows and outflows. Yeah, I mean, on other things, and it's really interesting to point out some professor actually relies a lot of gas, LNG, that have most of, which is linked to the price of oil, which could have a lot of potential with President Trump. And within that, is the OPEC Plus also discussing what to do next. We had the shift in OPEC Plus policy because for 5 years, since 2020, OPEC Plus had a clear strategy, which is basically larger than expected. Change and the changes confirmed actually that's not really the same thing. It was used today to do the same thing into also as gas prices because long-term gas contracts and then impact revenue on the regions. Definitely about the deals. I mean, it does feel, and everyone was talking about the fact that Donald Trump came here, that a lot of deals were signed. This is some long-lasting issues. I mean, there's a lot of questions about, the aircraft, but we can leave that concept. There's a lot of trade and investments going from the region to the US. If you think about what came in last week, 600 billion, 200 billion, and the 1 trillion, I think there's some exaggeration there. There was some exaggeration in Trump's first term. He said there was $450 billion of purchases from Saudi Arabia to the US. If you look at the numbers in detail, probably less than 800 billion. The region is also spending more domestically, which means it has less money to spend abroad. Saudi Arabia has turned from a borrower from the world, and that means even with low oil prices, the likelihood on this. I mean, it feels like there is a dependency, right, for the U.S. actually in the region because they need each other's capital. Yes, there is the capital dependency between the U.S. and the region, but also importantly, the U.S. is the number one security partner for the region. There is a sort of difference between the region and the US. The region secures energy across the world, and in return, the US secures the security of the region. But also, there's a big player, which is China. China's trade with China has grown significantly in recent years. It has actually overgrown trade with the US, and now trade with China stands at 4 times larger than the trade with the US. So the next one of the most interesting dynamics, right, is that speak to a lot of officials understand we don't have to choose between the US and China. Is that true? I don't agree with the US is an important security partner. China is an alliance partner. We need to find a way to choose the people to trade. Balancing is really the name of the game if you want to stay business. Yeah, thank you so much. Yeah, their chief emerging markets economist at Bloomberg Economics. Now, coming up on Open Interest, Mike Wilson, chief US equity strategist at Morgan Stanley. That's at 2 p.m. London time. A lot of the focus, of course, will be on dollar dynamics, on exactly how he sees everything with also treasuries. Now, our very own Giovanna Versace currently moderating a panel on building AI's backbone. Speakers, Doug Adams, the chief executive of NTT Global Data Centers, Mark Ganzi, the chief executive of Digital. The Qatar Economic Forum. It is it's the last day of the forum. We can continue watching it. I think it lasts until 3 or 2:30 p.m. local. Next, a Bloomberg Brief, and this is with
headquarters in New York. Market news and thing.
I have to see what I see. And what is
some effects on inflation on prices. I like the idea of the 10%. Or I don't think those are doing tremendous.
Elon Musk is probably for our age understands that we're in the most profound.
When we are
Not close this retirement gap without partnership. We have to have policy.
Do you think market is correct to be as of now pricing in 3 rate cuts in 2025?
Other side of that bed. Once again, going to this
Sanction of sanctions.
people say that no.
A year.
Big round coverage. Now, and
You're at the epicenter of the global realignment from the free markets, politics, conversation. This surveillance. In New York City, I'm Matt for Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. Bond market, President Trump's tax plan triggers a broader risk-off tone, and there was that as well. See, Jamie Dimon tells Fed is right and warns himself of stagflation. OpenAI acquisition, the company to buy an AI device startup founded by an Apple veteran making a push into some kind of magical new hardware. I don't know what it is yet. In terms of the markets right now, S&P futures are just 1% after a really bad day yesterday. Maybe not so bad. Loss. It was 185 seconds worth breath. Futures bouncing back as well, a few tenths of 1% small amounts. Houston, you're not outfits it. Namesake. My friends.
Silver of our fiscal sustainability be ignored. According to Goldman Sachs, the move in the 10-year yield is nearing the pain threshold for the equity market. Let's actually ask Katie McGee about that right now. She's U.S. investment specialist at JP Morgan Asset Management, telling us the 10-year yield moving up to 460, the 30-year yield moving up over 5%. How much of a concern is it?
Well, it has certainly been an interesting year for U.S. equity markets so far. Here we are in the middle of May. We're roughly flat on the year, but that masks a fair amount of volatility. We've already seen the market fall roughly 19% at the bottom, but over the last 6 weeks, we've seen the market rally by about 20%. Rally there. As you mentioned, we saw a little bit of a weaker day yesterday, and I think it's important for us to remember that there will still be a fair amount of volatility in equity markets, but important to look through that, focus on bottom-up company fundamentals, which is what we're trying to do for our clients.
Jamie Dimon says maybe a little too much complacency in that. Already?
Came into the year in a pretty reasonable place for the U.S. market. Growth was above trend, employment has come down, inflation had come down for students, and the earnings that we were seeing from companies were pretty good. We then, of course, saw a lot of fear come into the market around things like trade tensions, as well as things like CDC. And that made the market sold off pretty dramatically. But as you mentioned, a robust rally from there. That has been driven by an easing of trade tensions. It's also been driven a little bit by what we're hearing from underlying companies. We're still in the middle or towards the end of Q1 earnings season. Actually, S&P 500 companies' earnings year on year have come in above what the market expected, looking like they'll grow at about 13% year on year. That's above where the market was picturing at around 7%. So a pretty robust backdrop, but I think still an element of caution. We need to think a little bit about things, valuations, and navigating the market in a smart way.
So 13% is still pretty tricky. You see a lot of people downgrade expectations and say the Trump tariffs. They're not concerned that it takes a big.
The preliminary investigation indicates that both victims were exiting any
fundamental research analysts are out meeting with individual companies across the U.S. and around the world.
Northwest.
Coming into the year, we had projected
the shooting was committed by a single suspect who is now in custody. Prior to the shooting, the suspect was observed pacing back and forth outside of the scene. He approached a group of 4 people, produced a handgun, and opened fire, striking both of us.
You've heard more uncertainty around
shooting.
trade
The suspect
tensions.
then
We have
entered the zone
reevaluated and
and was
underwritten
detained
those
by
plans.
event security.
We've
Once in handcuffs, the suspect identified where he displayed a weapon, and that weapon has been recovered.
Things
And
that
he
different
implied
companies can
that he
do. Maybe
committed
some
the offense.
companies will take
The
the
suspect
themselves,
chanted,
lower their
"Free,
margins.
free
Others might pass the
Palestine,"
price, but
while
give
in
a
custody.
share to do that.
The suspect has been tentatively identified as 30-year-old Elias Rodriguez from Chicago, Illinois.
Into
Our
that low double-digit
case
case in
detectives are
Is
leading this
AI
investigation.
the only serious threat? It's here in the
studies at Stanford City. Good to have you with us. Generative AI is the next wave of innovation, the next platform shift in technology. The internet has changed the since the early 2000s. That mobile has changed the world for the last decade. AI will be the next wave. We need to, because we need the winners of tomorrow. To think about is that we just Trump used amount of capital expenditure in AI to try and make these claims. They've already spent $1 billion in AI. They've got another 320 or so images this year. Was
The big
there.
question is, when does that start translating
Why
into?
farmers? Do we know where that
This
is?
means that in folios, we've taken places in some of those names that have been the big beneficiaries so far, since they've already been so significant. Speaking of reinvesting across the business spectrum, that's the data centers, the electrification companies, the heating and ventilation companies that we're getting into this, whether that's utilities. Also thinking about benefit from shifts and changes in consumer spending, maybe finding opportunities in restaurants or business retailers. So interesting opportunities in the space and across styles and sectors, not just in the largest mega cap tech names that have driven markets.
We do.
Actually, Donald Trump did go on to claim that the government by decree is taking land.
Versus trying to through now. The jump in yields on a 10-year bond.
His words. Just briefly explain for us the land.
What do equity investors do? Where do you go?
Initiatives following the end of apartheid.
Expectations for growth across the US have come down.
Intention of the latest standards.
Where it was the last couple of years. Forecasting, you know, a dramatic recession in here. A little bit more slowly. And you'll see it's already reflected. Of course. Thing to think of as actual investors though is, firstly, we're starting at a pretty robust level. Margins are at near record levels for individual companies. Companies have already gone through the cycle of rehiring those employees